Hello all. I would like to talk about the failure of ethics during the 2008 financial crisis. The Financial Crisis Inquiry Commission concluded that the financial crisis was avoidable, and one of the reasons for the crisis was systematic breakdown in accountability and ethics. I will try to explain how the crisis occurred and situations where there was breakdown of ethics. The situations leading to the crisis were created by deregulation of the financial system. Financial industry spent over $5 billion lobbying for deregulation. Lobbying is a controversial topic, with many considering it unethical. The Financial Crisis Inquiry Commission also lists the following reasons which could have been caused due to lobbying. The 1999 repeal of the Glass-Steagall Act effectively removed the separation between investment banks and depository banks in the United States. The act which prohibited making risky investments with customer deposits. In 2000, derivatives were deregulated. A new financial system was created. Traditionally, lenders lent to homeowners who bought a house and mortgaged it. The new financial system consisted of home buyers, lenders, investment banks, investors, and insurance companies. In the new system, lenders sold these mortgages to investment banks. Investment banks borrowed heavily to buy millions of such mortgages. The investment banks bundled such mortgages with other loans to form complex derivatives called collateralized debt obligations. These CDOs were sold to investors. The investors further insured these CDOs using credit default swaps. However, speculators could also buy credit default swaps and bet against CDOs. As the demand for CDOs increased, lenders turned to subprime lending, that is, lending to people who would normally not qualify for a loan and who are not traditionally creditworthy. As a result, they defaulted. The housing bubble burst, and this led to the global financial crisis. Now let us take a look at the ethical issues over here. Accountability. In the new system, the mortgage broker, the lender, nor the banker was accountable and liable for the loan. The liability laid with investors all over the world who believed they were investing in highly safe securities as they were rated by the credit rating agencies. The credit rating agencies were not liable for their ratings. Pure greed. Due to lack of accountability, no one cared about the quality of the mortgage bought in. Mortgage brokers worked on commission and only cared about the number of mortgages bought in. Subprime, being riskier, had a higher return and therefore commanded a high commission. Therefore, there was relentless subprime lending by lenders. Conflict of interest. Banks would only do business with the credit rating agencies that provided them with favorable ratings that these banks wanted to show investors. The more complex the securitized product, the more the CRA would get paid. This is obviously unethical. After that crisis, taxpayers' money was used to bail out these banks. The investment bankers left with their personal wealth intact, but people all over the world lost their jobs and homes. The crisis could have been avoided if ethical practices were followed. Thank you.